Hey everybody, it's Greg Gossett, and today is Monday, April 29th, 2019, and we are in the final hour of the trading day. And thank you so much for stopping by and participating in the live stream. I hope everybody had a good weekend. And kind of the format for today is, first of all, we're going to run the legal disclaimer. That's about 40 seconds. Then we're going to take a look at my current positions, where we entered them, why I entered them, and how I'm going to manage them going forward. Then we are going to go through my watch list and see if we are able to find any setups for the end of the day. As you know, I like to trade during the last hour of the market. I consider it the lie detector of the market. I like the confirmation of the closing price because I believe that the professionals move the closing prices where they should be. So anyway, and then after we see if there's any setups, we're going to see if there's any questions, if anyone has any questions, and I'm happy to answer them after the market closes. So that is the plan. And so first of all, hang on, I'm going to have to play the legal disclaimer, and then when we are done with that, we will move on and we'll check out the markets. So hang in there for a second, and here.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, there we go. So, all right. So, the market currently, the Dow Jones is up 42 points, the NASDAQ is up 26 points, and the S&P is up 7 points. So let's just quickly look at those charts and see if we can glean anything from that. All right, so the Dow Jones Industrial did run up against the 70 RSI and the third ATR channel. It came off. It's attempting to go back up. Who knows whether it will or not. The 62 RSI, but it's quite a bit weaker than the rest of the averages. The Qs looks like it's closing in possibly on a new high today. It's a 79 RSI. It's very overbought at this point, but it doesn't mean that it's going to immediately go down. But my guess is it's probably going to move sidewards at best from here, but we'll see. It could continue up. SPY broke out to an all-time high today. Looks pretty strong at the 74.02 RSI. And it looks like it might close above the 30-day, the third ATR channel. IWM, which is the Russell 2000, is the strongest index of the day. Percentage-wise, it's a 61.55 RSI. So those are what the major averages are doing. Okay, let's take a look at my current positions, where we bought them, and what we are going to do with them. So Dexcom, I bought Dexcom back here on the 18th of April. I bought it because we had this lower low from here. We had a low, we had a rally, we had a lower low, but the MACD bars did not go red, which means it was a slowing of momentum. That was the first thing that attracted to me. The second thing that attracted to me was this particular day, the intraday, washed out the prior day, found no more sellers down here, reversed up here, and closed above the previous close. That's called the V1 entry. So that was the second indication that I like this trade. And the third indication was that in addition to the previous two, we also closed back above the previous range. So we had a double bottom, with a bullish divergence. We had a V1 trigger to the upside, and we also closed back in the old range. And as you can see, it's been a great trade for us. Currently, from entry, approximately 9.22%. I have been phasing out this entire time. I've got about 30% of my position left, and my profit target, my next profit target is there. So hasn't really come close today. It's a 54 RSI. If it does close below 50, I will go ahead and just lock in the entire profits from the trade. If it keeps going, I'll continue to phase, and I'll continue to trail the position. In case it reverses back, I'll get out and just lock in the trade. So currently right here, it's kind of a nothing burger. I'm glad it's up. It seems like it's finding a little resistance here, but we'll keep an open mind and we'll see what happens. All right, Etsy. Etsy, I purchased here on the 25th of April when we had this nice big strong move back above the 50-day moving average, which is the gray line. It came on large volume. I only took a half position. I was kind of hoping that the stock would close back within the range so I could add my other half position, give me a better risk to reward ratio price wise to the 50-day moving average. But the reason I did buy half was because in case it did take off without me, I didn't want to not be in the trade. So I'm extremely happy that I have half position, right? And as you can see today, I did hit 2 of my profit targets, which is nice. It's about 25% of the position that I took off. Currently, we're at a 60.14 RSI. And, I'm going to continue to phase out as it moves my way. And of course, I'm always watchful to where do I get out of this trade on the downside. Currently, where would I get out of this trade on the downside? Probably a close below halfway of this bar. That would make sense to me. I don't know if I want to go all the way back to my entry point. So probably a close below this bar, or if we continue up, the first lower high and lower low or close below the previous bar. Or if it gets up to 70, if it really moves up and it gets above 70 then closes below 70, I would also take it. But anyway, we bought this because of the big move across up the close below and then a close back above the upward sloping 50-day moving average, taking out this range, strong volume. MACD went positive today, which is positive. So right now it still has some room to move. GE, I bought GE Friday, the 26th, and I bought it because of a couple reasons. One, we took out this previous range strongly. MACD went positive on strong volume. And then in the greater context of the chart, we had this low, we rallied, we came back down, which is a higher low. It's very, I really like higher lows. They mean a lot. They mean a lot to me in the context of the chart. That means that, the people that bought down here sold here when it started to stall out. That drove it back down, but there were still enough buyers to move us back up enough to take us over this previous range enough to give us a V2. See how this bar washed out this bar and then moved up. So yeah, this is all looking good. We do have earnings tomorrow morning. So, we never hold through earnings, at least I don't. And because I feel like it's a big gamble. So this is a one-day trade. I will be taking this, the entire position off before the end of the day because I do not want to hold through earnings. But we have hit one profit target, and it's up 1.36% today. So I'm happy with that. I'm happy for the one-day trade, and hopefully it will hold, right? Okay, S&P, as most of you know, I purchase the S&P every day at the close and I sell it at the open. And the reason I do is based upon this study. Since 1993, if you would have bought the SPY on the open and then sold it on the close every day, so you bought it in the morning, sold it in the afternoon, you would have actually had a negative 5.2% return. But if you did the opposite and bought on the close, bought in the afternoon, sold first thing in the morning, you would have returned 568%, meaning that more than all performance came in after hours trading. So, that's fascinating to me. In my experience, I do know that a lot of the gains do come in after hours trading. So I do take a small position size every day on the S&P at the close, and I sell it on the open. Friday, we bought it here at 293.19, and today we sold at the open at 293.53. So I've been doing this over 40 trading days, and it has certainly been profitable. I do acknowledge that the market has gone up, and that does have, I'm sure, a lot of bearing on it. And if the market was going down, I don't believe obviously would have done as well. But I also believe that it probably would not have lost as much as the market if you just buying and holding as well. So that is SPY. We did make a little bit of profit on that today, and we'll buy that at the end of the day. Okay, so TLT, I bought this here on the 24th of April when we went above this fractal. Fractal means two lower highs to the left, two lower highs to the right. We moved above all the key moving averages. It was above a 50 RSI. The next day, it went down a little bit. The next day, Friday, it gapped nicely, and we took about 25% off here, which is, one of the reasons I like to phase, because if it does go my way, even if it reverses on me, I have at least locked in some profit up here. And if it does reverse on me, I've lost less if it reverses on the downside. And that's exactly what happened. So I bought it here, sold a little here. Obviously, we're underwater on the trade as a whole, but it helped mitigate the phasing out, helped mitigate, at least 25% of the loss. So looks like, well, if it does close below all these major moving averages and the 50 RSI, I will just go ahead and take that off and take the net loss on this trade because it's not moving our way. So, you always want to keep your losses small, and you want to keep an open mind and let the profits run when it goes your way. VIX, I bought down here. One of the reasons why is that the S&P kept going up and the VIX kind of stalled and started moving sideways, showing that there's a divergence between the price of the S&P and the VIX. So today it's up 27 cents. It's up about 1%. I did hit one profit target here. I actually did hit 3 profit targets the next day after I bought it here, here, and here. So I am out of, I guess, about 40% of this trade. It's very close to where I bought it, but I am up because of the phasing. I'm a big, big fan of phasing. All right, XLE. We bought XLE when we had the close below the 50, back over the 50, in addition to a V2. V2 is when you have these 3 bars. Here's day 1, day 2, day 3. Day 2 washed out day 1's low, and then day 3 reversed back up, closed over day 1's close. So 2 entry signals there for me. One, just the simple close below the 50, above the 50, but it happened together where you had a V2 at the same time. And I have been phasing out. I think I phased out 1 or 2 here, I can't remember, and then 1 or 2 here. Today we've reversed back. It's currently under the 49 RSI. I'm sorry, it's under the 50 RSI. It's 49. We purchased here, phased out here. If this closes where it's at right now, I will just go in and lock the entire profit in, because we're closing below the 50 and we're closing below the moving average. So that's kind of a red flag to me. But luckily, phasing out always helps because you get higher prices. And if you phase out and it continues to go higher, well, you're still happy because it's still going your way. So that is why I phase out. Okay, so that is about it on the current positions. Just real quick, Dexcom, we're waiting. I'm looking for a trailing stop to the downside. Etsy continuing to move our way. I will probably get out if we have a close below halfway of this bar. GE, another profit target. I will get out of this at the end of the day because of earnings tomorrow. S&P, we bought at the close, sold at the open. TLT looks very likely that I'm going to get out because it's closing below the moving averages and the 50 RSI. VIX is looking fine. Where would I get out of here? Probably if we close below a 30 RSI. And then XLE looks like we're going to get out because we're closing below the 50 RSI and the major moving averages. So that's kind of a wrap up on the current positions. And, glad to say having a nice profitable day. This is our 7th profitable day in a row. Knock on wood, right? Some days or some weeks you make money every day, but trust me, there will be a time that will come where the market will go down day after day after day after day, and you'll think this is just ridiculous. When's it ever going to go up? And it will go back up eventually, but there's going to be periods of time where you really have to sit on your hands and not take a trade unless you really have a reason to. I mean, I know we always feel like we want to be in the market doing something, but as Dr. Alexander Elder told me, he said, Greg, there are 3 positions in this market, long, short, and flat, and they're all equal. One is not better than the other. But listen, if you're flat and the market goes down 2%, well, you didn't make any money, but you saved money, and a penny saved is a penny earned, right? So keep that in mind. Being flat is a totally legitimate, okay position to have if there's nothing for you to do. And that is, I think, what a lot of traders have a hard time with is doing nothing. And I think it's one of the best things you can do. The longer I trade, the more I realize that doing nothing is super important if there's nothing to do. Okay, so I hope that helps. And listen, one other thing I want to tell you too is, I've been trading for so long, over 23 years. And when I first started, I wasn't scared of anything. And the more I trade, the longer I trade, the more I am absolutely scared of the market. I am super scared of the market, even though I've been doing this for so long. And you have to respect the market. I mean, when I get into a trade, my mindset is, okay, everything's lining up. I'm going to take this trade. But in my mind, I'm like, oh, this is probably going to be a loser. And does that sound like being negative? Not really, because it makes you scared of the trade. And if you're scared of the trade at the first signal that you're wrong, you're going to go, oh, see, I was wrong. And you're going to get out. And that's a good thing. If you're not scared of the trade, or you have an overabundance of confidence in the trade, if it moves against you and you're supposed to get out, there's a good chance that you won't, because you're so certain about what the trade will do and unafraid. So be afraid of every single position you have. It will help you not take as large of positions. It will help you get out of the positions when you should. Don't ever get cocky. This market, if you're cocky, the market's gonna come knocking on your door one day and knock that cocky right out of you. So be afraid of your positions. It's a good thing. Trust me. Okay, so now that I got off my little rant there, but it's important, right? Take this to heart. It's true. All right, so let's cruise down here and take a look at, see if we have any current setups for today. Apple, we're at a 69.90 RSI. It's just too high. We have earnings. There's just nothing there for me on Apple. Amgen, we had this big sell-off when Bernie Sanders kind of came out and talked about healthcare. We did stabilize. We've moved up a little, but there's really nothing interesting for me here whatsoever. possibly a 30 RSI to the downside. Amazon, we had earnings the other day, went down, had a big move up again. Today we're down a little bit, 73.67 RSI, just too high for me. You know, doesn't present a good risk to reward ratio. Boeing, I was considering buying Boeing if we could get a close above this previous high. That's why I like to wait for the close of the market. I like to see the confirming price because we were up there earlier, right? But if you would have bought intraday, you know, wouldn't have worked out so great. And I understand if you buy intraday that if it keeps going, you're going to get a better price. It's a difference between lag and whipsaw. Lag is if you wait for confirmation, you're going to buy higher. Whipsaw is if you buy intraday and it goes against you, you're going to get out quicker. And one's not better than the other. It really comes down to what kind of personality you have. But in my experience, the closing price is the most important to me and gives me the best confirmation. So currently nothing here on Boeing. Alibaba, just moving sideways. It's 55.86 RSI, which is good. It's not overbought at the moment. I would probably need to have a close below this 20 and a close back above in order to get in. Close back to the 50 and back over would be a great risk to reward ratio, right? And it probably just makes sense to you. I mean, you know, you see this in a nice uptrend. If it came down to the 50, that would be a good entry, but you have to be patient. And that's a big key in being profitable in trading. Just be patient. Caterpillar. I considered buying this on Friday. I had it on my watch list because it created this V2 and rejected the 50-day, but I just didn't like the large size of these bars. So, and it was a lower low. If we can come back down, test the 50 again, then close back up with a higher low, that would certainly get me interested. So we'll just be patient and wait for that. Canopy Growth, big day, 71.71 RSI. I mean, we're up in rarefied air there. I certainly wouldn't be buying this. But if I held it and it closed below 70, that would be my exit point. But as far as, you know, establishing a new position, maybe close back, maybe coming back here to the 20-day moving average, but it's not even close. So it's nothing I'm going to look at. Dow Jones, we already talked about. Dexcom, we do have. It is up. Been phasing out this entire position. The key here is when I'm going to get out. You know, if we, you know, it's possible we could hit this profit target here today. It's possible. I hope so. But I would probably take the first lower close. So tomorrow, if it closed below here, I would get out. Or if we moved up, you know, tomorrow and then the next day closed below the previous day's low, I would get out there as well. So, or if we close under the 50 RSI. So anyway, that one's moving up. It's been a great trade, close to 10%. eBay, it gapped on earnings, inside bars, inside this range. My guess is this is going to move strongly. Don't know when, and I don't know which way, but I imagine this is going to move strongly either up or down because it's winding up, moving sideways. Etsy, we hit 2 profit targets today. Be nice if it got up there to that 3rd profit target. So get on up there, baby. But it's nice, 2.7% today. Facebook, it scares me. I mean, it scares me that we gapped up. We closed lower than the open. We took out the low of the gap up day on the first day. Now we're rallying back. You know, my gut when I look at this is this day today is coming into halfway of this downward bar. You know, in my experience, that's bearish. I'm not going to short this, but this is a zone, if I were a shorter, that I would be looking at. 5 below just keeps going up every single day. Unbelievable. Need a pullback on this. Kind of need to reset this back to the 20-day, most likely. Yeah. What I'd really like to see is I'd like to see the price come down, get to the 20-day or the -1 ATR channel, find some kind of support at the same time we have an RSI of 50. So finding, two levels of support, one in moving average and one in RSI, then having a V1, V2 to trigger us into the trade. It's really important to look for multiple entry signals when you get into something. Let's see, Swiss franc, had a real strong down move, but it looks like we're moving sideways, which is good. But there's nothing there for me now. At the very least, I would need to close back above 30, but even that, there's no really other confirming indicators. GE, we have, we bought this breaking over the range and the lower high before it compared to that, the MACD moving up and the nice RSI going over 50. But we're out of that today because of earnings tomorrow. Gold, it did make this lower low, tried to rally. People that bought here after they saw this move down probably sold it. That's why we're seeing this move down. I'd like to see a V1, V2 entry, higher low to get us back in. Google has earnings after the bell. So if I were in this position, I would certainly be selling it before earnings come out. We don't really know what's going to happen with earnings. Could go rocketing up or could go going down, but why take the risk? If you're going to gamble, because that's a straight up gamble. If you're going to gamble, go to Las Vegas and get a free hotel room and have some fun at least. But you don't get any comps in the market for gambling. Goldman Sachs is a strong day over the 260, 53 RSI. I do have this on my watch list at the end of the day, although candidly, I don't like the downward sloping 200 day, and still we're lower high than here. So I mark this, we'll see where this closes. HCA had the sell off. It's come right back up. See right here on the 50 RSI, see how it's, when you're below the 50 and then you come up to the 50, it's like a glass ceiling, and you can see it's exactly what happened, and these moving averages as well. So in order for me to get interested in HCA, although it has earnings, probably have to have it come back down here, make a higher low than this bottom, and then some kind of V1, V2 trigger to the upside. IBB, similar to HCA, really nothing of interest there. All right, so Intel is quite interesting. This pattern does not come along very often, but when it does, I feel like it's pretty strong. And the pattern is, do you see how we have the 100-day moving average below us? And at the same time, do you see how we have a 70-32 RSI? So those are two levels of support. The 100-day is a level just by itself, and the 30 RSI is a level just by itself. So we have two of those at the same time. And do you see how we're here at the 6th ATR channel as well? So, that one gets thrown in. That's positive as well. Now, do I think it's going to go rocket back up? I have no idea. But what I do know is that we have a lot of support here, right? We have the 30, we have the 100, we have the 6 ATR channel. And if I buy this at the end of the day, if I'm wrong, well, I'm wrong small, because any close below here, I'm out. Even if it's a penny, I'm out. So, it might open down here, right? That's certainly possible. It could open down here. But, if you do this 100 times, most likely your loss will be pretty small because you're close to the stop loss as it is, and your rewards probably back up to here, I would imagine, probably back up to the 50-day moving average in a confluence with a 50 RSI. So these are very scary to buy, but they are good setups, and most likely I will buy this today as long as it holds above a 30 RSI. Most likely I'm going to probably just buy a half, because I would say more likely than not, this is going to continue down. But why am I taking it? Well, because, I have a lot of indicators that line up to tell me. And if I'm wrong small. But if it is, if we do get a bounce, I probably have 2 to 3 times my risk to the upside that I do to my downside. So I'm certainly watching Intel today. Russell 2000, it's moving up. 6106 RSI. The time to have bought this would have been here with the close back above the 200-day moving average. Good entry. I didn't like it so much because of this downward sloping 200. Johnson & Johnson has just been a hot mess. Just moving sideways. Look at all this volume. It doesn't know where it's going to go. It just scares me. There's just too much volatility. Coca-Cola is having another up day. I did buy Coke here when we tested the 200-day 3-4 times. We closed back above the 50 RSI. I'm sorry, we closed back above the 50-day moving average. We took out this previous range. MACD was positive. RSI was over 50. So I did buy here, and I scaled out to here. And the reason I got out next day was earnings. So that's why. Obviously, in hindsight, it would have been better to hold through earnings, right? But it was still a nice profitable trade without having to gamble on earnings. One thing I want to say too is that, we've had a lot of upside surprises with earnings lately. And my concern is, do not get conditioned just because this earnings season, there's been upside surprises. You might see that and go, man, I should have held through earnings here. I should have held through earnings there. And then when the next quarter rolls around and it's time to decide whether or not you're going to stay through earnings or not, you might think, well, it happened last time. Well, just because it happened last time a lot does not mean it's going to happen this time. So, let me kind of warn you about that. Just because the market's doing something now does not mean it's going to do it in the future. With earnings or any chart pattern or so forth. But again, circling it back to always be scared of your entries. Position correctly. Don't take too many shares. And if you're scared of your position, you're going to get out when you're supposed to. So, okay. Lockheed Martin. I did buy Lockheed Martin here. Exited here. Exited a couple days before earnings. Probably should not have, but it was still a nice profitable trade. Earnings, again, were positive this time, but we're moving sidewards. So I would probably need a reset back down to the 20-day moving average for me to get interested in this. MasterCard is just perpetually going up. It's a 79 RSI. It has earnings, I believe, tomorrow. So would not touch this. I would like to possibly see if we can get a dip back down here somewhere in the value zone around the 20-day moving average, or even to the 50. And you might say it's so far away from the 50. Well, that's right. But, identify what you're looking at and say, look, in 3 months, a month or 2 months, if it comes back down here, then that would be a good entry point. And it would be a good entry point. It's not a great entry point up here. Doesn't mean it's not going to continue up, but statistically, buying up in these ranges, you're better off waiting for a dip. 3M, here's a good example of why not to buy earnings. Big down day. I think it was 13%. So we're moving sidewards right here. Kind of hard to say what to do on this one. If you wanted to buy 3M, a close back above the 30 RSI would be the minimum. But to me, there's no other confirming indicators right here other than that. I think this has some work to do to base before we see a move, but who knows, but not interested now. Philip Morris did bounce off that 30 RSI. I'm sorry, the close to the 30 RSI and the 100. That's what I'm hoping for with Intel today if I buy it. But I would not buy it here now because it's a 44 RSI, and most likely it's, its profit potential probably will be the 50 RSI. That's only 6 points away, and it's very likely it could come back down here and test. So the risk to reward ratio is not good. Merck, I did buy Merck here on this day. when we close on this day, when we closed below the 200, closed back above, and where did I ride that to? I think I rode that to here. Yeah, it was just a couple day trade, but it was good. It was a couple percent. The reason I got out was because this day we were under 30 RSI, we went over 30, then closed back below 30. So the 30 that's usually support was actually resistance, in this case above us. And obviously it's moved up since there, but that's fine. I have a set of rules and filters that I use, and and I followed them like I was supposed to. And it turned out, like I said, to be a couple percent trade. Microsoft moving sideways since earnings. Again, on something like this, I would need some kind of pullback, probably minimum to the 20-day moving average, and then look back into value. The value is the green lines. Somewhere back into this range, maybe find support here. That would be a good entry point. And again, I'm aware that this is probably not going to happen anytime soon, and that's fine, but I'm just pointing this out down the road. And I think that's one of the best ways to do it, is just look at a chart, say in 2 or 3 weeks, if this happens, that's where I'll be looking to possibly enter this stock. Netflix, we did take out this previous high. We rallied up for one more day after that. Now we've come back down. We're moving sideways. What I really like to see is this to move sideways for a little bit longer. Test this 200-day one more time. Have it go below, close back above. Keep my stop very close. Close back above the 50, where I would get out, and a close below the 50. But that's what I would be waiting for on this. But nothing here today. Nike, nothing here today. We did buy this back here on April 12th when we took out this previous fractal. 2 highs to the left, 2 highs to the right. RSI was not overbought. I think it was like 55. MACD went positive, and this was a really nice trade for us. As soon as we bought it, went chugging up, and we got out here. And the reason we got out here is because we got over 70 RSI during the day, and then at the end of the day, it closed below, confirming that people did not want it up in this range, and that's why we got out. And then it immediately reversed, and now it's just kind of moving sideways. So on this, maybe a pullback to the 20-day moving average, getting as close to the 20 as I could for a very small stop, or possibly to the 50. So don't know which way it's going to go. Could go rocketing up. I don't know. But anyway, nothing of interest today. Philip Morris. See, this big bar here concerns me. It's the range is so high. I think most likely what's going to happen is the stock is going to move sidewards within this range for a while. But in order for any real kind of breakout to take place, it's going to have to get above here or below here to the downside. So really nothing on Philip Morris. PayPal, nice strong day today. Broke to the upside. Thing about it is when you start making these all-time highs, everyone's happy because everyone who's ever bought is in the money. So there's not a lot of selling pressure. That's why these breakouts sometimes can really move strong. Really the only kind of pressure you have is profit-taking pressure. But for me, again, it's a 76 RSI. It doesn't mean it won't continue to go up. It's probably more likely to go up than down, but the levels of where I'm going to put my profit targets and the level where I'm going to put my stops are unclear to me at this elevated level. Qs continuing to move up. We're to 79.40 RSI. Same with PayPal, it's just too high. Silver. We did attempt to rally back over the 200. I considered buying that here, but again, the reason I did not buy it on Friday was because of this downward sloping 200. I don't like those. I like upward sloping much better. Now, if I wanted to short something, shorting into a downward sloping, that's a different story, and that would have worked out well. But anyway, in order for me to get interested on silver or the metals, I really need the 5-day to cross over the 20-day. That's a well back tested moving average system that over time is profitable. The 520 520 EMA cross, but it's going to be a while until that happens. S&P 500, we did take that overnight trade and it turned out nice. Square, we closed below the 200. We attempted to go back up to the 100. We failed. We do have a higher low in, so that is good. And again, higher low is where people bought this dip. When it got up to here and started to stall, they sold. That's most likely what moved the stock down. But on the bright side, these buyers are now, they've already sold. So these sellers are out of the equation. And anytime you can get sellers out of the equation, it's easier for things to go up. So I would be interested in Square if we were to close above the 200, but unfortunately we have earnings coming up. So during earnings seasons, a lot of times you'll have a nice setup, but earnings will preclude you from getting into the trade. So anyway, we'll just be patient with this one. Well, let's be patient with every trade, right? AT&T, almost bought AT&T here. And the reason I didn't, I can't remember what the value of the 200 was, but I said, I'm going to buy a half position on this if it closes above the 200. And it actually closed 1 penny below. Darn it. Right. But you have to follow your rules. Had it closed above, I would have kept it and this would have been obviously a nice trade. Although if I were in this trade, I would certainly be looking at probably locking this in now, because it looks like earlier today, we did test the 50 RSI and we lost it. So people that bought here most likely will be taking their profits here today. Maybe, but most likely, but we'll see. But I didn't get in it because it did not close above the 200. And I certainly wouldn't get in it now because it's a 46.82 RSI. Really, my profit target is going to be the 50. So I've only got, about 3 points to the upside and probably 16 points to the downside. So the risk to reward doesn't make sense. Okay. TLT, again, I did buy this on the 24th. We took out this fractal, moved nice. Next day it was sideways, moved nicely our way. The next day took 2 profit targets on this, but today it reversed. Looks like it's going to close below the 50 RSI and below our moving averages. So this one was a loss, but again, it was mitigated by the fact that we took some profits up here, which really helps when it goes back down. So I will be getting out of this today. I believe it was a good setup and did move our way, but it's not reacting the way we want it to. So let's just cut that loss small and get out. Tesla. So Friday we did close below 30 RSI, and then today it looks like we're above a 30 RSI, which by itself is a signal, but I'm not going to buy this, and I'll tell you why. If we had a double bottom, where there was support of a double bottom, or we had a bullish MACD convergence, or there was the third ATR channel of support below us, I would consider it. But we lost this third ATR channel, and as you can see, my trading partner Bruce pointed this out last night, that the Tesla has really found support at that third ATR channel many times, right? Here, here, here. And if you go back even more so, it really has caught support at that at the third ATR channel. Friday was the first time we lost that third ATR channel in a long time. And what used to be support, the third ATR channel used to be support. Well, now it's lost it. So what does it become now? Now it becomes resistance. And, almost to the penny, you can see we did rally today, but it looks like we are now having issues with that previous support, which is now resistance of the third ATR channel. So based upon we don't have any other confirming indicators to show us, all you're doing is buying under 30 back over 30 RSI, and it's just not enough for me. So I am going to pass on Tesla. UNG, On this day here, I considered buying it, but the reason I did not, it did go from under 30 back over 30, but the reason I didn't was the same thing as with Tesla. It was only under 30, over 30. We had the third ATR channel above us, so I didn't take it. Although now we've closed back within the third ATR channel, so my guess is that the third ATR channel will again now act as support, but there's really nothing here to get me interested in this trade. UNH, same as the others. We had the big sell-off. People bought the dip. It is at 50.6 RSI, so you know this is kind of an inflection point here. If it can continue to move up and keep above that 50, that'll be good for the bulls. If we fail here, if we fail and go down, a lot of the people that bought here will be selling, and that will most likely make it go down. A lot of these buyers down here will be watching this number today and seeing whether or not it closes under 50. And my guess is if it closes under 50, they most likely will lock in their profit. Oil, you know, we had that big down day. We've had an attempted rally today, but I don't like to take entries in front of large range bars. I don't want that bar really most of the time to be larger than one ATR channel. See the distance from here to here, here to here. This is, you know, getting close to 2 or maybe even 2 ATR channels, and we're kind of near the halfway of this bar. So oil is not interesting to me here right now at all. UUP is the dollar. It looks like it's come off a little bit. You know, if I were to get interested in the dollar, most likely it would have to be down here around this 20-day moving average, get back in value. Here we're above value. I want to see it come back to the mean. Visa, strong. Boy, is that strong, 77.11. Congratulations if any of you have that. It's just extremely high. There's just really nothing I can do with that. The VIX looks like it's getting stronger and stronger. Did hit one profit target. I bought this because the S&P kept going up, and the VIX, which is based upon the price of the S&P puts, is starting to move sideways. So it's a divergence. If it was a convergence, the VIX would be going down just as much as the S&P is going up. You know, here we had a low, we rallied, now we're starting to come back. It's not painting any reds. So anyway, I am keeping this VIX. This seems like it's really trying to form a bottom. Verizon closed below the 100, back above the 200. It's 43 RSI. I wouldn't buy this because most likely our profit target would be a 50 RSI or this 50-day moving average, and our stop would be further down than our profit to the upside, so not a good risk to reward ratio. XLE energy, I did buy this here, but when it stopped below the 200, I got out, and good thing I did, right? I really don't like to hold too many things under the 200-day moving average. Consumer staples, I was waiting for it to get down here. That's exactly where it got, but I was hoping that I could get an entry closer to the 20-day moving average. But anyway, nothing really available for us there. Real estate looks like we are definitely going to get out, although it was a positive trade because of the phase outs. So today's a big down day, closing under 50, but we bought it here. But again, we hit 2 or 3 phase outs on the upside, so this is the time to lock that in. Healthcare, just like the rest, deep dip. Now it's struggling with the 50 RSI. See this middle line is the 50 RSI. So in order for me to get interested in this, I would probably need a move back down, have a higher low V1, V2 entry, and back up. That's where I would be interested. And the transports had a big down day. We're moving sideways. I'd like to see this move sideways for a few more days, move down, reverse, have a V1, V2 entry. So really the only thing that looks like a possibility today It's not Boeing. Yeah, I'm gonna let Goldman Sachs go because of the 200 there, the downward sloping 200. It's gonna be Intel if it holds above the 30 RSI. It's very close. Let's look at this intraday. Looks like it's made its low for the day, but as long as it does close below the 200 or the above the 30 RSI, I will take a position. And I think I'm going to take a half position, a 5% position size. So that is the plan. All right, so this last 10 minutes is when I have to do my trades, do my math. So I won't be speaking as much, which you guys are probably happy for. But I will probably be speaking out loud because that's what I do when I place my trades. So very glad that this has been a nice, profitable trading day, and always be really grateful on the days that you have green days, because you are going to have down days, and the difference between a professional trader and a non-professional trader, I believe, is how they handle themselves emotionally, and how they sit on their hands when there's nothing to do. So if there's nothing to do, just sit on your hands and don't do anything. All right, so as long as Intel stays above 30 RSI, I'm going to buy it. Dexcom, looks like we don't have to do anything with Dexcom there. We're going to keep that until it gives us a reason to get out. All right. Etsy, 2 profit targets, that's fine. GE, we are getting out of there today. TLT looks like we're going to get out of, and XLRE looks like we're going to get out of. So I'm just going to go ahead and get rid of our XLE right now, XLRE.
Order filled.
All right, that's one XLRE gone. Now I've got to get rid of another set of XLRE in a different account that I trade. Okay, that's taken care of. TLT. I'm going to go ahead and get rid of our TLT now. And we're getting rid of it because it moved against us, and we just want to get rid of it. We do not want to let that build into a bigger loss.
Order partially filled.
All right, that TLT
Order
is
filled.
gone. These are now weeds. We want to keep weeds out of our garden. Okay. All right. So TLT is gone. XLRE is gone. We still have VIX. We need to get out of GE. Probably give this one a few more seconds to see if this is going to rally into earnings. S&P, we're going to buy that at the end of the day as well. I really try to wait until the last second, but when you have multiple accounts and you have multiple positions that you're waiting on, it's just not possible, right? Sometimes you just have to do the trades early, but in an ideal world, I would wait to like the last second if I possibly could. Let's take a look at GE intraday. It's trying to push up there. And then we'll take a look at Intel. So Intel's at 30.47. Probably just give that a few more minutes before we make our decision on that. Maybe you should get some Weed Be Gone spray. Oh, for the garden? I am the Weed Be Gone spray, Bruce. I am Weed Be Gone. You all should be Weed Be Gones as well. Just weed them out. If they're not going your way or they're reversing, just get rid of that hope. Just the market's telling you you're wrong. The market's right. The market's generally always right, probably all the time right. So just get rid of it. Yeah, I am conservative today, Bruce. I am. And the reason I am is because of, all the high readings, the strong move we've had up. It doesn't mean I'm not going to buy anything. I still am buying Intel. 30.57. You can see intraday here that we have stabbed down. I'd like to see a V1, V2 intraday, which would be good. These are 39-minute bars. Yeah, this is a tough one, but we are going to have to start getting moving here. All right, I think I'm just going to have to go ahead and get rid of GE. All right, one GE is gone.
Order partially filled.
Two EGs are
Order
gone.
filled.
All right, so we're out of GE. We're out of XLRE, and we're out of TLT. So we're keeping our winners and getting rid of our losers, although GE was not a loser, it was a winner, but it has earnings. All right, so that's going to leave the SPY and Intel for us to take a look at. So we have about 3 minutes left. All right, I'm going to go ahead and I guess the more important one here would be to get the SPY first and then Intel at the end. All right, so I'm going to go ahead. I'm going to get my SPY.
Order filled.
All right. Okay, SPY is purchased. Now we are down to Intel. And I'm just going to get this chambered up here. And then we'll try to wait it out. We'll try to wait till the very end and see what the end of the market tells us. So I'm just getting this all chambered up. So all I have to do is click the button in both accounts. Okay. We have a minute and a half. All right, so we're at a 30.59 RSI. Just going to wait as long as possible. The 100-day moving average is a 50.95. So at some point here, what do I have? Just about 1 minute left. This is a good example of just waiting till the end and really waiting to see what the end of the day is going to tell you. All right, we got about 45 seconds. Is it going to hold? Is it going to hold? think it's going to hold the 50. I'm sorry, the 30. All right.
Order partially
I'm
filled.
going to have to pull the trigger.
Order filled.
Okay. Well, we got it. And what do we have? We have 7 seconds. Oh, that's good. It did hold the 100. It did hold the 30. So that's good. Let's take a look.
Order canceled.
Hey, I did make a video this week that you can find up on my channel. I go through all the indicators that I have on my charts, so that, and I try to, explain exactly what each indicator is, why I use it. So if you get some time, if you watch this and you're not quite sure what's that line, what's this line, what's this thing over there, it's about a 50-minute video that I recorded over the weekend, but I go through every single indicator. I talk about the settings, why I use them, and I also did a video of my 7 different trading setups that is on my channel as well. They weren't live, I just taped them, but I think those 2 videos will really be of value to people. So if you get some time, check them out. And then before we get into questions and answers, I do also want to let you know that I do private one-on-one coaching at nighttime via Skype. So if you feel like you could benefit from that or have an interest, my email address and my hourly rates are down below in the description section of this site. And I really appreciate you guys coming by, subscribing to the channel. If you felt like this was of help to you today in any way, do me a favor and hit the thumbs up button. That always helps with Google and, to build a subscriber base. And, if you know someone that could, this might be helpful, go ahead and share it with them, or share it on social media and tell people about it. So I'm really here to help you learn about correct trading principles, and hopefully if you watch every day, they'll start rubbing off on you. Hopefully, right? You learn some good things. So Bruce says, have a good hike, good trades today. Videos are really good too. Oh, thanks, Bruce. So anyway, does anyone have any questions at all about any of the trades I made today, or just any questions in general? If you do, just type them into the chat over there and I will do my best to answer them. Crickets, crickets. I have to get like a cricket soundbite. So I explained everything so well. No one has any questions. Well, that's good. Okay. So looks like no one has any questions, but if you have questions later, write them down and I'm more than happy to answer them tomorrow. So, all right, I'll give it about 15 more seconds, and if no one has any questions, I am going to go up in the mountains and hike with Katie. Okay. All right, well, listen. Oh, Ramble Ron, thanks for video. Hey, you're welcome, Ramble Ron. I appreciate it. I hope it was helpful to you. Hope you come by again tomorrow. So, all right, everybody, thanks again for tuning in, and we will be back live tomorrow during the last hour of the market. So everybody have a good day. On the way out here, I have to play the legal disclaimer, so enjoy that as well. All right, take care and hopefully see you tomorrow. Bye, everybody.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.